Hello traders, Joseph here again, and thank you so much for tuning into today's video. So what I'm going to be doing in this video is I'm going to be showing you guys a tutorial on one of my strategies that I do trade with me and my traders. So but I have to tell you guys that you have to really pay close attention. So if you're going to watch this video, if you're watching this video now, then you need to really drop everything you're doing and pay close attention, because what I'm going to show you in this video is going to be really helpful. It's going to help you guys see the markets, see structures, see technical trading in a totally different way. So I'm going to get really into the details of everything regarding that strategy. So really for the next 10 to 15 minutes, I want you guys to pay really close attention, because this might actually change a lot of people. They might actually make a huge difference to your trading. But before I get into that, just want to recap on the results from my WhatsApp trading group for last month. So the month of February, we've actually had a pretty decent month. It wasn't as good as the month of January, obviously, as you can see. We've had 16 winners and 10 losers, and we still made 2,000, just over 2,000 pips. So the thing is that about this strategy that I'm going to show you today is actually these two over here. They kind of go hand in hand. The 1 2 3 or and 1 2 3 or an SP, they kind of do go hand in hand, and that's the strategy that I'm going to break down for you guys. Now the reason why this strategy is so important, or the reason why this strategy is really good, is because you know how in trading, if you have a strategy in trading that gives you a good risk to reward ratio, then that's a good strategy, right? But if you have a strategy that gives you a good risk to reward ratio and also gives you a high winning percentage, then you have a killer strategy. That combination is a deadly combination in the Forex market, and I'll show you exactly why this is the strategy that you're gonna actually really like. So let's go over to the charts. And so the first thing I'm gonna do, I need just a clear space, because I need to I'm gonna break everything down in terms of like just showing you the diagram and things like that, and then we're gonna go over to the charts and I'll go over a few examples. So but this is the bit I want you guys to pay close attention, because this is the part where I'm going to take it really slow, because I have to explain every single movement, every single details in the Forex market. And if you understand this bit, then it's going to be a lot easier for you when I go over to the charts. And to be honest with you, I'm going to spend more time on this bit than showing you examples on the chart. When I go over to the charts, I'm just going to go run through the charts very quickly. So I'm going to draw something on the chart here, and this is what I'm going to draw. Okay, so this is my drawing on the chart. Now a lot of people will look at this. If I just ask you guys, what do you think this is in regards to the Forex market? Just take a few seconds to think about it, right? So if you've got your answers, so this is a bearish structure, and most of you got it right. It's a bearish structure. This is a typical this of what a bearish structure look like. So we're just gonna put in some labels onto it, and the labels are just gonna be, I'm gonna abbreviate. So we call that the starting point here, and then obviously the market makes a initial structure low. This letters are a bit too big, so I'm just gonna kind of just bring it down a notch. So market makes a starting point, or the starting point of an impulse leg. It makes an initial structure low, and then it gives you a correction or a retracement, and that retracement is known as the outside return. Yeah. And then the market makes a new structure low. So this is a typical bearish structure. Excuse me, this is what a bearish structure looks like. Yeah. So the whole strategy that I'm about to show you guys is gonna revolve around this bearish structure. So what if I put a line here to just give you a bigger impulse leg? This impulse leg changes. So for example, if you had a bearish structure, you would expect the market to continue bearish, right? But me putting an impulse like here changes the direction the whole way you look at this bearish structure. So instead of looking at this as a bearish structure, wave traders will look at this as a correction, as a corrective pattern. So either an ABC corrective pattern or a 1, 2, 3 wave corrective pattern, right? So you got 1, you got a 2, and you got a 3. So you got a 3 wave corrective pattern. So as a wave trader, you look at this, you're gonna see, oh, the market is you know, it just made a corrective pattern. This is a the simplest form of a corrective pattern, the 1, 2, 3 wave corrective pattern, or the ABC. And obviously, after the market makes this pattern, you would expect the market to make another impulse to the upside, right? Now this is a typical market movement. Impulse leg followed by a correction, followed by a bigger move upside. Now if you're being even too technical, you can just, if you try to ignore this correction as just a single, then you're gonna form a bullish structure. So you got a 1 starting point, new structure, initial structure high, outside return, and new structure high. So the whole gives you a bullish structure. Yeah, but this is where I need you guys to really pay attention. So what do you want whenever a market makes a move like this? When do you trade as a trader? When do you trade? Now this is what they teach you. I mean, if you read books, if you go on Baby Pips, or if you take any trading course in the world, this is what they're gonna teach you. They're gonna teach you that, okay, the market makes an impulse leg here, gives you a correction here. Once it start making the next impulse leg, they'll tell you this is where you buy, right? At the break of that structure, because since this is a correction, you got an impulse leg in the general direction of the market, you buy. The market is gonna go up, so you take the trade here. And just to kind of clarify a few things as well, this can also be, I mean, depending on where you're learning to trade. So if you're not a wave trader, if you're not familiar with a wave trading, as in knowing this as an impulse leg, and then you got a corrective pattern, then you might be familiar with some people that use this as a kind of what's the word I'm looking for? Not consolidation, but contraction. Some people that call this a contraction. I mean, this is the typical ways that the market moves is, obviously that's what it is. It gives you a contraction and then followed by an expansion. So this is what we're saying, this is an expansion. So a contraction is usually consolidation, where the market kind of trades within a certain range. So you don't really make money during contraction. You don't really make money during a corrective pattern. You know, as a wave trader will tell you, you're not going to make money during a corrective pattern, because when the market is in the corrective pattern, it's actually consolidating. So you're hardly going to make this. You want to position yourself to take advantage of these kind of moves. The impulse legs, the impulse legs move. Those are the kind of move you want to be on if you want to make money on it. But this is what they will teach you, right? Depending on how you look at this, you know, if you want to look at this as a what do you call resistance and support, obviously you see the market breaking. This can be, you know, seen as a resistance. The market breaks the resistance, you buy, you go on a trade here and you buy it. Or if you're looking at this as a wave structure, you got a corrective pattern. Once the market starts breaking out of that corrective pattern, or some people might even tell you to buy at the previous structure. So once the market breaks this previous structure, this is where you buy. Yeah. So I hate to break it to you, guys, but this is what I call a trap. This is where most people lose money. Why? Because this move right here, once I go over to the charts and start showing you the examples, you're gonna see that 90% of the time, once the market breaks out of this structure and starts going up, as soon as it breaks that out, either this structure here or that structure here, it reverses completely. It reverses completely. So you're taking your trade here, you're gonna see your your money, the money in your account start going up. You're gonna get excited. This is where all the 90% of traders are. 90% of traders, or most retail traders, this is where they take their trades. And there's a reason why 90% of traders are not successful in trading, right? So they take the trade, and then you watch the market completely reverse, and you're wondering, why? What have I done wrong? And to even make it worse, as soon as that market reverses, and then it starts going in the direction that you were originally in that trade. So I talk about messing with your mind. That's why emotions is one of the things that it's that defines traders. Because you're in a trade like this, the market reverses, you take a loss, and then you see the market go in your direction, and you're gonna be beating yourself because you're actually right. But there's something you don't get because you don't understand structure. You don't understand, you know how the market behaves. The market behaves in a certain way, and this is not a signal to buy. This is just an intention. Sometimes it's just an intention that the market telling you, this is, oh, I'm about to go in that direction, however I'm about to take a pause. So speaking of my strategy that I'm about to give you, which is the 1 2 3 with a break of outside return, a 1 2 3 with a break of outside return and starting point. So you can see already on the chart here, so you got the 1 2 3 wave correction. Yeah, so you're looking at this. So the 1 2 3 wave correction, a bearish structure. So the break of the outside return, that's the break of the outside return. And if the market breaks both the outside return and the starting point, so this is what the strategy is about. So this is the first sign that I look for with my strategy. Once I see this break, then I was like, okay, so we're coming out of this contraction phase, we're coming out of this consolidation phase, out of this corrective pattern, but it doesn't mean the market is going up just yet, because I know the market always comes back to the previous structure low, to the previous new structure low, right? So the market comes back here. This is where I look for an opportunity to go long in the market. Because if I go long on this market, knowing the fact that this trend still holds, this impulse leg, and knowing the fact that if the market does reverse here, the movement is going to be quite huge. So look at just to give you a perspective in terms of the risk to reward ratio. This is how I usually take my trades with my traders. Yeah. So this can go as high as I need it to be. I have different ways of determining where to put my profit target or my stop loss. But what I can guarantee you is the fact that every single one of my trades have a risk to reward ratio of at least 2 to 1. And guess what, guys? This is where most of the money is made in trading. You don't make money in these traps. Like, don't stop getting caught in these traps. Focus on this. Focus on that. But you need to be able to understand. I mean, you need to be able to kind of, you still have to need, obviously you are going to need a method in order that will help you determine how to enter a trade from here. Because like I said, this reversal, it could go deep, it could just come straight and just reverses on a dime. So you need to be able to position yourself in a way that you know exactly what method you're looking for. So I hope that kind of makes sense to you guys, because I'm gonna go over to the charts right now and I'll show you a few examples but this is, you know, what the strategy is about. So 1, 2, 3, and you know, the OR and the SP is just to determine, because sometimes if the market can come and just break this straight away and reverse, go back to the previous structure, and we take the trade here. So with this, in this situation, this is the 1, 2, 3 with a break of just an outside return. If the market comes all the way to the top and breaks the starting point, it becomes a 1, 2, 3 with a break of outside return and starting point, and then we look to enter the trade at the bottom here. That's why with my strategy, I can have I can take 10 trades, I can lose 7 trades, and win 3 trades, and still be on a profit because of the risk to reward ratio. Look at that. Look at you guys can see it clearly. So let's head over to the charts. And like I said, I'm gonna breeze through the examples on the chart because I don't want this video to be too long. But anyway, so before I show you guys the examples on the charts, anyway, like if you haven't still joined me on my WhatsApp trading, like I said, this is I've actually taken down the price, so it's only gonna cost you about £10 a month, just to join us. I mean, that's nothing to you, not to most people. That's nothing to the majority of people. I mean, you pay probably 5 times more than that amount on your phone bill or whatever. So £10 a month is not going to cost you anything to come into a trading group where you're going to be getting over 3,000 pips in profit every month. We take about 5 to 7 trades every week, and all the trades are like what exactly this. Well, they're not all exactly the same strategy. I mean, I have other strategies as well that I trade. And also, speaking of learning how to trade, this is just a teaser of one of the strategies that I do trade. But if you do want to learn how to trade other strategies as well, like I said, I have the courses. So here's the WhatsApp trading group, $9.99. I mean, those people that get my courses, they get free access into the group. So I'm actually at a point where I'll be taking a few students, you know, probably from now to the end of the month. So I've got an offer that I'm doing for my courses. Like I said, a complete trader course, that's not going at half price. Like I said, it's something like with these courses, guys, you can pay in installments. As long as you just message me, I can break it down for you in terms of the, you know, some people might be too expensive for some people, but if you want to pay in installments, that is absolutely possible. We can definitely arrange and sort something out. But with my courses, that's what you're gonna get. It's just one-on-one lessons with just you and me, looking at the markets, and you know, because I believe this is a lot better than, you know, you just going and buying a course and whatever. I mean, you get to, you know, to face me in real time. We talk about trading, we go over trading, you know, trading methods, trading strategies. I show you guys different, you know, it's so much better, guys. So like I said, yeah, so just message me before you buy any of the courses, and then if you need it, you know, to pay in installments or anything, then we can arrange that as well. But anyway, heading back to the chart. So I'm back on the chart right now. So I'm going to be showing you all these kind of strategies. So one thing I want you guys to do is try and don't focus too much on the starting point, on this impulse leg. Don't focus too much on it. I put that impulse leg just to kind of you know, make those people that trade that wave traders, just to kind of understand it a little bit more. But really, I don't really pay too much attention. This is where my focus is. I look for these patterns in the chart, and I look for the way the market has caused has broken any of the structure. So let me go over to the chart, and like I said, I'm going to breeze through it. So what do we have here? 1, 2, 3. Break of what? Outside return. This is the outside return. That's the starting point. So 1, 2, 3, break of outside return, and here's the trap for retail traders. Retail traders go short here. 90% of the traders go short here as soon as the market breaks that outside return. And what happens? The market reverses back to the previous structure, yeah? Previous structure here. And where's the money? This is where the money is. This is exactly what I just showed you, but it's just in complete reverse. So instead of looking at bearish structure or corrective pattern, or the 1, 2, 3, this is a bullish structure. It's a corrective pattern. It's a 1, 2, 3. Break of outside return, break of outside return. This is the trap. and this is where the money is. This is where the money is. Is that making sense to you guys? Okay, let's move on to the next one. I'm gonna show you plenty, at least 5 before I finish this video. At least 5 of those same trades. So let's go. Another one here. 1, 2, 3. Break of structure, outside return. This is a trap here. If you're in this trap shorting the market, guess what? You've put yourself through a huge emotional distress. Back to the previous structure. Where's the money? This is where the money is. Right? Moving on. Let's go. More examples are coming. Like I said, I've warned you guys. More examples are coming. Right? Let's go. We have another one here. This is more like the one I just showed you in my example. So 1, 2, 3. Bearish structure. Break of starting point and the outside return. Where's the trap? Here's the trap. The market coming back to the previous structure. You can see we go a little bit deeper this time around. But if you know how to trade, if you know how to find entries, where's the money? This is where the money is. Are you seeing that? Are you paying attention, guys? Are you paying attention? Another one here. Yeah. 1, 2, 3. Break of structure and outside return. This is a trap. Previous structure low. A little bit deeper. Where's the money? This is where the money is. Why would you want to take this little profit when you can take 3 times as much? Let's go. How many examples is that? I keep going. Another one here. 1, 2. Oops, that's a little bit. 1, 2, 3. Break of structure and outside return. This is a trap. At least that was a little bit better, because there's a lot of money, a bit of money in this trap. Back to the previous structure. Where's the money? This is the money. One more example, guys. Maybe I have no more example. Oh, I do have a. This is an even bigger example. So look at this one here, guys. 1, 2, 3. Break off outside return. We didn't break the starting point. Where's the trap? This is the trap here, guys. Come back to the previous structure. Where's the money? This is the money, guys. Like I said, this is probably gonna take you guys a few more practices. Like, I've been trading this for over a year, like I said, so it's a lot easier for me. I can go through a chart right now and I'll just see plenty of them. But it might take you a while to kind of understand it, to kind of do some practice, to kind of understand, you know, to form a strategy around it, how to enter, how to look at this. Well, what qualifies as a 1, 2, 3 with a break of structure and outside return. You know, there's just so many things. To kind of, this is not something that you're gonna get after one video. Like, if you're trying to get it after this video, just forget about it. It's not gonna happen. But you need more practice on it. But this is what it is, guys. Like I said, so if you guys do like this this tutorial video, like I said, just help spread the word. Like, I'm trying to, you know, help as many people out there as I can. So yeah, just share the video, like it, you know, whoever gets it, you know, the more you're doing, the more support you're giving to the channel, and I greatly appreciate it. So let's grow, guys, and the more support I get, the more energy you guys give me, the more I can give you more content. I can try and I might even try to start doing what's it called, live trading, and show you guys how to actually trade in real life, in terms of, you know, using this kind of strategies of, you know, on every single, how to analyze things like that. There's so many things, guys, that I want to do for you guys. But if I don't get the support, if I don't get the energy from you guys, then it's gonna be difficult for me to do that. So yeah, so anything you do, like, you know, in terms of, you know, liking the just liking the video, or, you know, subscribing to the channel, or, you know, any comments you have, just drop it in the box down below. Like I said, I plan to, you know, to help you guys as much as I can, because I know there's so many people out there that are struggling to understand how trading works, and, you know, they just spend too many, you know, a lot of their money buying, you know, rubbish courses that doesn't really explain to you the details, the technical details of how the market actually move. Like in this example, you can see in this tutorial, guys, you can see how it is. The market repeats this pattern repeats every single time, and you are gonna see it time and time and again. So what if one doesn't work? You don't take a huge loss. I mean, look at the risk to reward ratio. You need to be on the side where there's money in the market, you know. From these examples that I just showed you, even if you lose, you can, you know, it's three losers to one win makes you break even. That's what the strategy is about. So anyway, I think I'm gonna stop talking now, and hopefully you guys are gonna you know, keep, you know, supporting the channel, and keep and I do appreciate it. So like I said, until next time, guys, yeah, take care.